Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim, and this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week, and hopefully lots of good ideas and opportunities for you that you'll discover throughout this show. Stocks got a big lift last week, early in the week for sure, as the French election, the results brought relief. Macron, who beat out Le Pen by a couple percentage points, leads big in the polls for round two, and that really gives a sense for the fact that, well, the euro currency, the eurozone for now, is likely to survive. European stocks surged, as did the euro currency, and the flight to safety bid, well, left the building, as we saw those things that they were, running for safety in bonds and gold really significantly weaken. The stock indexes in the U.S. here moved to new highs as they got a lift with the rest of the European markets. We saw the S&P 500 gain close to 2% on the week, as did the Dow Jones Industrial Average. The NASDAQ, which has certainly been the strongest index and really benefiting from some strong earnings reports, especially out of Amazon and Google, that jumped about 2.75% for the week. And the Russell, which had looked better and had some pretty good gains, is having a bad day here on Friday and is up about 1.5% for the week. Still did surge to a new high, but looking a lot weaker than it did just a couple of days ago. That's the Russell, and that, of course, are the small cap stocks. Bond market, French election clearly gave some relief, and the Eurozone inflation numbers came out much stronger, and that broke the bonds in Europe. That really helped our bonds to get weaker on top of people liquidating after the French election. You also had this selling coming in here on Friday, not dramatically here in the U.S., a lot more dramatic in the Eurozone. So the 30-year bond down about 1.5 on the week. 10-year yields moved up about 7 basis points on the week. So that was a pretty big jump in interest rates. Dollar had a big downside move as the inversely correlated euro had that big jump, and the British pound also very strong, as people are starting to realize that maybe Brexit isn't all that bad, and the British pound, which was on our list of the 14 best trades for the year on the long side, is just doing super well. Gold, silver, well, gold down about $18, as again, that was the strongest of all the metals, and starts to give it up. Silver, which has been incredibly weak, has a second really bad week in a row, down over 60 cents for silver, on top of a 60-something cent loss the week before. I mean, that's really a collapse in silver, and it doesn't really say a whole lot for economic growth when you look at an industrial metal like that struggling, and copper is really struggling also right now. So that doesn't really bode well for the future growth around the world when you see that kind of action. Copper is called Dr. Copper, and usually because it diagnoses the condition of the economics around the world, and it's been incredibly weak. We think it's given a bottom in here, but man, that is really, it's been tough to get it to tick up. Oil down 60 cents as inventories in the U.S. were stronger, and U.S. production is up, especially in shale, and that's making up for the OPEC cuts, and OPEC is talking about extending their production cuts, and that has got oil really acting weak also. As a matter of fact, We'll be showing our members in the member version of our short-term view the breakdown in gasoline, and that doesn't say very much positive for the energy sector as a whole. So President Trump, he rolled out his broad look at a tax plan and pushing to get the health care plan done now also. He was really pushing to put stuff out before the 100th day, like the 100th day really means anything. He's got lots of other things to deal with here, especially the debt ceiling and the budget, which doesn't seem to be a big deal to him. Big deal to me, that's for sure. So what he had Secretary Mnuchin roll out, and he had Speaker Ryan out there discussing as far as the tax plan and the health care plan. There's no chance of that passing. I'll say it again. Those plans, as they are right now, with the problems on the Republican side and the mortal enemies of the Democrats, there is no chance of those passing. So maybe the markets are, discovering that as they start thinking about it. And yeah, a little piecemeal and stuff they can get done. But when they start dealing with the rules, they're going to really have a problem, because it takes 60 votes in the Senate unless they do little pieces of it. And that's going to bring some pretty big disappointment. So the stock market moved back up to highs. And that is, a good thing, right? Most of the bulls are really happy about that. But there are warnings out there, and I want to talk about that with those warnings right now. What I want you to see is some stuff on the breadth of the market. So I'm going to show you 4 slides right now that I think are valuable for you to look at. So just take a look at this right now. I'm going to show you 4 slides here that I think are a really good representation of the breadth of the market, kind of looking at the S&P 500, the New York Stock Exchange, and even the small cap stocks. So this first chart you're looking at here, most of these charts are going to be basically about the last 14, 15 months as we go back to the beginning of 2016. And what we're looking at here is the percent of the S&P 500 stocks at a 52-week high. So you could see right over here the stock market challenging the high as the S&P 500 almost got back up to that 2,400 level. But look what's going on in here. So you could see throughout this rally over here in 2016, that was 15 to 20% of the S&P 500 at a 52-week high. Where are we right now? Well, we spiked up close to that, got up to about 18% right there. And you could see over here spiked up to about 30%. That was just in last February. But look where we are now. There's a massive deterioration going on. We're below 5% of the S&P 500 at 52-week high. That is showing you a real deterioration of breadth. So the next one we're going to look at here is the S&P 500 stocks that are at 50-day highs. In other words, those stocks that are, in the last, right now trading at the high they have in the last 50 days, minus the stocks that are trading at their 50-day lows. So you can, if it was really strong, you would have a pretty good representation of those 500 stocks. You could see here in 2016, there were like 150 to 200 stocks that were, net near their 50-day highs. Now where are we? At 0 mark. What does that mean? There are an equal number of stocks at 50-day highs as 50-day lows. That shows you an incredible amount of weakness for a market being at a new all-time high. NASDAQ making new highs certainly. And that is just an incredible situation where you have that kind of weakness, essentially, as the market has been this strong, especially over these last number of days. So you can't, you can't make small of that kind of a number. There is really not a lot of strength that's showing up across the broad market when you see that. So the next one we're going to look at here is the small cap, S&P 500 small cap 600 and the number of stocks that are at 50-day highs. And you could see in here again, when you look back in 2016, these are percentages that were at highs were in the 25, 30, 33% right over here. Look what's happened now this year right there as the market has essentially moved sideways for all of these months. We are just struggling to get these numbers up, and right now they're only at 10% of the small caps that are trading at 50-day highs. So you can see that, you saw the Russell today turn down significantly, a lot weaker than the broad market. Down nearly 1% right now, and the small caps are not strong at all when you look at that. They've been underperforming. They got a little bit of a pop in the last week, but basically we're seeing a lot of weakness in here. I mean, that's an incredibly weak number at only a 10% at 50-day highs. That's another example of the broad market being weak. And here's the last one we're going to show you right here, which is the percent of New York Stock Exchange highs with a 14-day relative strength index, RSI, that's the Wells Wilder RSI, that's above 70. Now, that is a key number when you get above 70 on a stock, because that shows you a lot of strength. And again, when you compare the rallies in other times, like the end of the year right over here, you had, as much as 27% above their above 70 on the RSI. These were, you can see, in the area of about 16 or 17. We were trading way down over here at about 3% up until this rally, and now it's only gotten up to about 11% right now. So again, that shows you the low participation in the rally. So when you get that, it really means that there's a very narrow leadership going on in the market. So I wanted to see all of those slides, and I thought that they were really valuable. So as you can see, market leadership is really narrowing. Those market breadth indicators are a sign that the leadership is so narrow that the vast majority of the stocks out there, and we've shown lots of groups that have been really weak in our videos. I mean, they're not participating hardly at all in this rally. Sure, they tick up in downtrends, but they're not really very significant. Thanks to Index Indicators, that site, a great site for looking up stuff like this, for those charts. We're going to include that, and you wouldn't believe how much stuff in a new Traders Hub that we're putting together that will give you access to what I think are the very, very key sites to go to look up important information. And so we're going to be giving you access to that pretty soon for our members. So this rally that we're having in the stock market, with this breadth having deteriorated, that rally has done nothing to disturb our analysis that we have recently done. That says that we believe that there's a 2,000-point downtick coming in the Dow. Our original analysis was, when we did that, yeah, we could have a rally and we could test the highs, but we think that the real risk comes into the summertime. You want to see that, become a level 1 member, and you'll be able to watch that video with really advanced cycle analysis on there and some important fundamentals that go along with it that support the fact that there's a correction out there not too far away, and it's going to be pretty steep. That's it. I think you probably found that interesting, as I did as I was putting that together. So let's take a look here as we look at our 60-minute chart for the last week and see what happened this week in the stock market. Here is that 60-minute chart of the ES. The gray area, of course, is the area that is the overnight trading, and the white area is the trading that occurred during the day. So Monday we had a huge upward spike. This is where it started the day, based on Sunday, based on the overnight, based on the trading at the end of the previous week, and then it explodes up here based on the French election relief, as Macron is the favorite over Le Pen very significantly. Eurozone overall up about 3.5%. The French CAC 40 was up about 4.2%. China down 1.4%. Honest steel crackdown over there. They seem to be falling in line with the U.S. demands about dumping steel. And U.S. stocks, they jumped up early. They were up about 27, and they pretty much held in there throughout the day. It didn't change very much. The world stock market still basking from that move up again on Tuesday. Japan was the best, up about 1% as the yen weakened. New home sales were stronger and prices really strong as inventories are pretty low out there. And that higher prices are really getting prices up to levels that you got to really worry about affordability. But U.S. strong stocks up again on earnings report, and the Dow up over 1%, and as 4 Dow stocks beat on earnings, and you saw this upward move, and it held right through the end of the day, but then it started to tick down. Again, Japan up 1% on Wednesday, was strong on the yen decline, and that when the yen goes down, they get real excited over there, so they buy up their stocks. World stock markets were up a little bit, and investors were buying ahead of the release of the President Trump tax plan. A late sell-off hit, though. It was kind of a sell the news thing, and that made the high for the week, basically, as we were waiting for what Mnuchin said was the biggest tax cut ever. But the question is, how will it possibly pass Congress? You got to be able to buy their dynamic scoring. The Democrats are going to not buy that whatsoever. And U.S. Steel just absolutely cracks huge, and I'll show you that one in our worst stocks of the week. On a real earnings shock. They were supposed to make money, and they lost money, and that really led the materials sector down. Tuesday was kind of a weaker day. Overnight didn't happen very much. The Trump tax plan met skepticism. Yeah, me too. I'm highly skeptical. I would love to see it, man. I'm a real low tax guy and small government guy as a libertarian, but I don't see them passing this thing. ECB comes out, their policy is unchanged. They really were quite dovish, and that's despite the fact that Friday they reported some strong core inflation. And the comment that Draghi made was that the recovery is increasingly solid in there. U.S. stocks, they really slow down. They chop a lot in here. Look at the diamond formation right in there. You see that diamond right there? And that kind of was a little high right there at that point. And you can see head and shoulders right in here if you like looking at those things. And that, of course, set up this weaker day on Friday. That core inflation rate in the EU comes in the most in 4 years. Euro bonds down sharply. The Bunds in Germany, they're up 9 basis points on the week, and we're up 7 basis points here on our 10 years. So our U.S. bond market is also weak, and that's in front of the FOMC that's coming in the next week. I'll show you that on the calendar in a second. Google and Amazon jump big on their earnings reports, and that leads the NASDAQ up, but it has slipped here. It was up very significantly, like 20-something points, and now it's only up about 8 points as we get in here towards the last hour of the day. So that's a look at what went on in the last week. Let's take a look at our economic calendar for the coming week, and you can see in here still a lot of earnings reports coming out. That is probably another week or so after this of earnings reports, and then we'll be through this giant onslaught of them that we have had. So you could see the lists in there. Everybody's going to be watching Tesla after the close on Wednesday. That's for sure one of the big ones, and you can just take a little picture of this and put it up by your computer, and then you'll have the widely helds that are going to be reporting this week. As far as economic news for the week, well, we get Tuesday, the beginning of the FOMC meeting, and Wednesday at 2 p.m. Eastern Time will be the announcement. Also have the employment numbers this week. It's kind of unusual that we have the FOMC and the employment numbers on the same week. So Wednesday we get the private sector ADP, and then we get the employment situation and numbers here on Friday. So those are all really big numbers, and we will see if there is anything supportive in those numbers to what the Fed is saying, which is essentially that they're going to be moving the interest rates up steadily for this year and into next year, but at an incredibly slow rate because they're afraid to pop the bubble they created. That's it for the opening segment, and we are going to be right back with the best and worst stocks for the week. All right, for the best stocks of the week, we have quite a number to look at in here as we've had these earnings reports coming out, and that then does give you a lot of movement, and we've had a lot of movement in a lot of stocks. I pretty much handpick out the ones that I think are best to show you based on our cycle work. Remember, I'm a cycle analyst. Avi and I do this every single day as we look at our 400 symbols, 320 stocks roughly, plus ETFs and futures. So we look at a lot. We apply our cycle analysis, which is looking at the rhythms of the market, essentially money flow, as it's depicted on these charts. And then we bring that to you every single week, and hopefully it gives you a heads up, greater market awareness, a good sense for how these markets move. That's what we really want to do, is raise your odds of success by giving you a greater market awareness. So here is Twitter. We're going to look at Twitter, which was the big gainer for the week in my universe of stocks. And here is Twitter, and you can see the cycle analysis in there. So we'll just look at the rhythms carefully in here so that you can get a sense for what I look at. We look for repeating cycle lengths. These cycle brackets on the bottom give us a sense for important lows as they are made in a rhythmic motion, and it's hard to argue with the rhythms that you see right over there, as each of those point to an important low. And that's how you measure cycles from low to low. And what we look at are multiple time frames and cycle configurations, support resistance zones, in order to give us a sense for market condition, entries for longs or entries for shorts. In this case right over here, you can see each of these time periods where there was a correction and a new rally beginning. You could see it exactly followed those patterns right in here, every one of them. Now when it doesn't rally very far and then breaks the low as you did right over here, that gives you a negative pattern. When it rallies really far and then only has a little time to correct, it gives you a positive pattern, and then it goes up. So you get a ton of information off of this style of analysis. The low was due right over here. It moves up very sharply. Their revenues missed, but their users jumped, and it's all about politics. I mean, with Donald Trump out there tweeting and people watching that, and people watching other things in politics, and people commenting all over the place on their political opinions, it's stimulated things there, and it's probably not going away. This is a resistance zone, so this area right over here, the top of it is around 1707. The moving average right over here is about 1730. That's about the best we see going on right now, and we you see our projection in here. If somebody doesn't come and buy them out, well, it's likely to do something like we have projected in here, not be able to get very far past that resistance zone. So that's a look at Twitter, and a 14% gainer, the best of the week. UAA is the next one we're going to look at, which is Under Armour. Take a look right here as we bring it in, and you can see the same thing. Just amazing cyclic action in here in Under Armour, and a low due right over here. You can see that declining phase and this rally phase. When you see 2 cycle brackets in here, you know that we have found a harmonic. Essentially, that is the bigger pattern and the 2 smaller patterns all within there. It's like music, these things. And that says to us, you know, that there are smaller moves within the bigger moves, and we look for that information. So 2 cycles pushing up right here. Here's your resistance zone. Their earnings beat, revenue's good. This stock was on our list of riskiest for the year, and you can see it did really well. Our lists of best and worst for the year really mixed so far. It's a long year. We've had some that we thought were risky in the FANG stocks do really well, and we've had some stocks that were risky in other stocks that did really poorly, just as this one here in Cree Research, which I will show you also. So we get this upturn here that says to us that a important low is in place. Here's your resistance zone. We don't expect it to get past there, but it still could get to about $24 at the top of the resistance zone. As you could see, our projection is right there as we zoom in on that. So that's Under Armour with a good week. We did a video on Thursday where we talked about stocks that we thought were the most buyable, and you'll want to look at that in our member videos under stock sectors. 2 of the stocks that we mentioned in there, this is annoying when you don't even get to see the video and it works. One of them was Royal Caribbean, the other was Carnival Cruise, and we thought they were fantastic patterns, and that it was likely that they were resuming on the upside. So we put that out on Thursday, and then Friday the earnings come out, and we see this gigantic move here in Royal Caribbean. It's up 10% on the week. Earnings came out, and you can see in here that they beat by about 5 cents. However, they are also doing a buyback. Yeah, they're flush with cash. So, and there's the cyclic rhythms that you can see in there. This one says expand to 10-year, so you could see the right rhythms, and we'll do that. Now you could see they're perfectly in alignment. Again, showing you the harmonics in there. When you see that they're purple versus black, you know that we made a small adjustment. We're always taking the data and refreshing it so that we can give the best read for our subscribers. And in this case, you can see the bottom in here as it formed perfectly on time, and the move up, and that was just the second week up in this advance. So that means if it pulls back, you buy it. Strong 10% up in the week. In a similar group, which is hotel and gaming, is Wynn Resorts. Now, Wynn, we were super bullish on it. We saw this massive diamond forming. They're up 6% on the week as they beat on earnings, and they made positive comments on Macau that's improving. So we saw the breakout here of the diamond formation, and that then has been moving up ever since. We put in a long trade right in there, and that has been absolutely stupendous for those people that hung on to it. First Solar, FSLR, is the next one we're going to look at. This one in here, you can see the alignment. We're expecting a bottom right in here, and this gets a good uptick right now. Analysts have upgraded this one. Their earnings come out on May 2nd. So I would say that if this one gets a dip on earnings, you buy it, because you could see the bottom is formed in here. We were looking for bottoms to form in these next couple of weeks in these solar stocks, so that worked out really nicely. Like I said in a little earlier in the show, I was talking about the NASDAQ being really strong, and that Google and Amazon are been strong also in leading that. They both had really good earnings. I'm going to show you a little later on in the show our rankings and setups table and how it identified the strength in Google and Amazon. So you're going to want to look at that. I know a lot of people speed through some of those stuff when I show you some of our membership stuff, but I don't want you to speed through that one. I want you to look at how that identified it, and I think it's really valuable. Take a look here at The first thing we'll look at is Google, G-O-O-G-L, which has a solid 7% gain on the week. Here is that chart, and it moves up to and through some Fibonacci extensions. So again, you could see the cycle harmonics in here. I'll teach you about cycle harmonics when I do my workshop, and you can sign up for that on the interest list on our site. Let me know that you're interested, and I'll send you an email when it's ready. I'm probably still more than a month away on it as I'm writing it and getting ready to record. So there's the important lows you can see right there. Here is the half cycle lows right there. You can see that there and that there, and you can see the quarter cycle lows right over here and here. So that identified the bottom here. Note the big diamond consolidation and the small one right over here. 3 cycles pushing up, and there you get that upside move. Just spectacular move in there as their earnings beat. Analysts are all over this one, upgrading it. The target's around 1050, 1075. So that is a look at that pattern, as it was quite strong. Here's Amazon right over here. And you can see in here, again, it's been in an upward phase. You can see that. Let's get a little closer look right here. As it gets into the fib extension, it jumps up to 90, right around 950, which this fib extension was 953. And then it pulls back. It gives up a lot of ground in there. It's up less than 3% for the week. Still a good gain on its earnings, but its valuations are really extraordinarily high. Let's take a peek at the daily chart in here, and you can see this cycle rhythm that's going on there. And look at this. This is a big rejection here today. That says to me that that stock is going to come down or retrace further, and you could see our projection in there. So I wanted to give you a peek of what the daily chart looked like and how it did reject in this big way, as you can see from those fib extensions. So that's important when you look at that. Take a look at Xilinx, XLNX. Here is Xilinx. We're going to zoom in on this right here. Again, you could see positive cycle rhythms. Now, you know, this is very clear. I mean, you have this upward trend going on right over here. It steepens the trend right over here. Here's your positive cycle configurations right in here that are making an upward stair-step move. When you get that, each one is supposed to make a higher high above those highs, and you could see that each one of those did that. The probabilities of that are better than 3 to 1 when you get these formations, and this explosion on the upside in Xilinx. These semiconductors are on fire. This is a specialized semiconductor. Semiconductor materials are also just super strong, and this one up 7% on the week. A solid gainer as their earnings beat. Gotta love that Xilinx, and you gotta love these positive patterns when you see them. So also included in my video on last Thursday, I did some discussion about the industrial stocks. One of those I talked about was Caterpillar. Caterpillar up some 7% on the week as it reported some strong earnings. I'll also mention that it was in positive in our rankings and setups table, and here's an example of our colored phasing on cycles that you can see here. And again, you have this stair-step upward cyclical motion where this is your bottom targets right over here. This was these two blue spikes show you the timing that we estimated a bottom to come, and now here's the next estimation of timing on a bottom to come. So we're in this rising phase, and we would look for a topping in here and then a rolling over pretty soon, but we don't have any real sign of a top yet, as this is in this rising phase. Very strong. Their outlook was really strong, and their earnings did beat. Now, I just said we don't have an indication on this weekly chart of anything topping, but I want you to note on the daily chart. Here is the daily chart, and you can see that orange arrow right over there, and our note 2 subscribers right there. Let's get this out of the way a little bit so you can see. Extreme short-term overbought reversal pending when that came out, and that is on our rankings and setups table, and that is our option bias ranking, and you can see in here as it turns down in here and corrects, and the timing on the cycle low is right over here. So we would look for further downward correction and chop to this date, which comes right around May 10th. So for now, we're going to say that overbought condition is working as it is rolling over. So that is Caterpillar, and a nice strong look in there at that. Now we're going to switch over here, and I want you to take a look at Alcoa. This is the Alcoa weekly chart. Now, I don't like this one, and I'll tell you why I don't like it. First of all, the materials group is terribly weak. This is a bullish pattern right over here, and it came a little bit late. When it comes late, it kind of says to me that there is an issue in here. You see how this one came late, and it tried to rally and failed and then turned bearish. Now look at the giant rejection. I mean, this is the high for the week right over there, and it gives that all up. I don't like it. Maybe it could get a little higher, but you could see our projection shows it rolling over in there. And when you look at this pattern in here, this is an evening star in there that has formed, and that says that this pattern right in here is a concern, and that it was easy to reject. It's come back down here to the 89-day moving average. The downward momentum neutralized. The downward momentum based on the slim ribbon was set in right over here. It had this long period of decline, and there's your neutral signal right there, but it hasn't been able to get past neutral. I don't love Alcoa, and I'm thinking that if you get a little bit more rally in there at some point soon, it is pretty shortable. So that's a look at Alcoa, and one I am not really thrilled with. So again, I want to comment about my video on Thursday where I talked about 15 symbols that I thought were buyable in this market, because you want to be able to buy things, right? And not feel like they're at the highs and be afraid to. And in there, I talked about the Eurozone, the country ETFs, and there are 5 in there that are really fantastic patterns. So got to take a look at those also. And I also talked about 5 stocks that were, I thought, good setups for the short side. I'll mention those a little bit later on. So these European ETFs look great, and I think if there's a pullback in there, they had big gains on the week, as I mentioned earlier, gaining on Monday like 3.5–4%, and then following through. I think if there's a pullback in these Euro ETFs, that's EWU, EWG. Those are, I think, going to be good buys. So I want to mention those also, and so get your radar up on those. That is the best of the week in stocks, and now I'm going to take you over to the worst. All right, the worst of the week. We'll take a look at these stocks in here. The worst by far, an absolute crusher, is U.S. Steel. Take a look as we switch over to this chart of U.S. Steel. Now, it was 3 weeks ago that we talked about a breakdown of the intermediate cycle low. So in other words, it's this low right over here. Now this dotted line here is the DBB, which is a little bit out of sync. That's the base metals. And we said 3 weeks ago when it broke under here that that was a really bad message, and it turned into this red zone. And now look what happened this week, down 27%. They were expected to earn money, and they had a sizable loss. And all of this buying came in based on the Donald Trump win, figuring that this is U.S. Steel and all of this infrastructure building is going to help them. But they got way ahead of it. And now we don't have a low projected for about another 3 to 5 weeks. So we think if there's a rally in here in U.S. Steel, it is likely to be a good sale when you look at that. So U.S. Steel a bad-looking stock, and I would be a seller in there on an uptick. In other steel stocks, AK Steel down 6%, a bad chart in that one. Schnitzer down 1%. Also a bad-looking chart there. That's SCHN. Nucor had an up week. It fought against that trend, but I don't like that pattern either, and I think that Nucor is going to move to the downside also in UE. Let's talk about the second worst stock for the week, and a stock that I just don't stop beating up on. Let's take a look here as we switch over to SHLD. This is the chart of Sears SHLD. And we talked in the last couple of weeks about this cycle peak resistance and how I thought that this was still a horrible stock, and all of this optimism that they had come up with cash they had gotten from unit sales. And here's your evening star right over here that's formed those 3 bars. And as it moves down 24% on the week, we think it's going to just, keep, moving up and down in here and eventually move down sharply into June. That it's $5.5 it made. I don't think it's going to get down that low again, but I just don't think this stock has any upside, and I don't think there's any really way to save it. Now, the worst one, of course, that I keep bringing up is JCPenney. So when I bring up Sears, I have to bring up the JCPenney chart. I want you to see something significant in here, and that is I talk about cyclical breakdowns. Now, I said that JCPenney is the highest priced $2 stock I see. And as it tries to get these ridiculous rallies that you can see over here in the beginning of this rising cycle, then I just don't trust those. And here it breaks that cycle low. So that now sets it on a downtrend. This thing could be, under $2 by July based on this pattern that I see in here. So when you look at what a negative cycle looks like, it's right here. You see, this is when it was a higher price stock, of course. That's the important cycle low. It comes down and breaks it here and then collapses for this whole period of time. That's the same scenario you got right over here. So JCPenney really a very, very ugly looking stock. And I think, like I say, down 5% on the week, it's got a breakdown, and I would not do anything but figure this stock is going bye-bye. All right, so the next one we'll look at is Seagate. This is interesting because Western Digital had really good earnings on Friday, and Seagate, STX, and Western Digital almost always trade exactly alike. But in this case, the parting company. And that gives me a sense that maybe Western Digital is a sell. Take a look what happened here in STX. Let me switch over to this chart for you. And here we put up the weekly chart in Seagate, STX. Now, this is key. It's come down to a key area. This one moves down 15% on the week. This is a big break for a stock that really was doing well. And you could see the positive cyclic action in here. Now it comes down to the 34-week moving average on that very big gap that you can see in there. Now, earnings beat, but their sales really missed. And that had everybody really nervous. You can see in here on the daily chart, as we switch over to that there's this huge kicker pattern on massive volume. These stocks don't normally recover from that kind of action. And I think if it gets back up to around 44.5, that's the 89-day moving average. I think that's the spot to sell it if it does get a bounce. Now take a look at Western Digital. Now this was up 3% on the week. And this one made the inverted head and shoulders measurement nicely, gets up here into this fib extension confluence on this good earnings, and I'm including an up stock in my worst of the week because I think it's going to turn down from here from that resistance level. And you can see right over here it's got this multiple top patterns right over here, and now giving this hanging man right there. That's a hanging man. I think that these top patterns are correct, and I think that Western Digital is going to reverse back to the downside, and I think this one deserves to be in the worst of the week because I think it's a bad pattern, and that Seagate is really telling the story in there. We're going to switch over now to Cree. This is a stock that was on our list for the riskiest of the year for 2017. Take a look here at this cyclic action that you can see right here, as very clearly it's following these cycles with huge volatility. I mean, massive moves, and each one of these lows right on time. So this decline to this level is certainly not a surprise. It'll probably bottom in a couple of weeks and then turn lower again. So this is a stock that really has failed to perform, a company that in LCD light bulbs has really struggled to perform, and Cree down 12% on the week as earnings missed, and don't like this one at all. So now we're going to switch over and talk about the drilling stocks, the drillers. The drillers are weak. And oil, of course, is weak, and we've had some ugly breakdowns in here. Neighbor, NBR, their earnings, can't really read them. It was one of those earnings reports that you could spend an hour on and not understand them. But it's not hard to understand when the CEO comes out and says he was disappointed. So that is kind of a tell, right, that there's some trouble out there. Take a look at NBR as we switch over to the weekly chart in there. Let's take a closer look right over here. Let's move this over to 2-year weekly, and I'll make it a little clearer. And you can see in here a really bad breakdown. So when we were looking for a low to occur, and it did occur right on time, right over here. You can see that. It almost gave up the whole rally from that low, and that's bearish when it does it. We never figured it would just rally for 2 weeks and then come down and break the low. That gives us this projection extraordinarily negative when you look at Neighbor. Earnings can't really tell, but that is an ugly chart when you look at that. I want you to take a look at Schlumberger, SLB. This is also the same pattern and an early breakdown. Well, you can see our projection as it moves down under the first support there. This is really an ugly looking pattern, and I would say that you really have to believe that what's going on in the breakdown in gasoline and the weakness in the whole energy sector, that's being reflected on what you see in here. And the major international oils are doing similar as they look exceptionally weak also. The golds had a bad week also. ABX, Barrick Gold, down 10% on the week. Let's take a look at that one here as I switch to ABX. So here's the ABX chart, and you can see that this was a time period we expected it to go down. We expect gold to go down also. Our short-term view for members, we'll be talking about that, but not too much longer. So this looks like about 2-3 weeks more on the downside, and then we think it's going to turn up again. So dollar weakness is pretty extraordinary, and I think when you get past this liquidation phase in silver and copper that's going on, I think we're going to see better in metals. So ABX down 10% on the week as earnings miss, and they guide lower, but I think they're going to be in better shape in just a couple of weeks. Other stocks that are in that category, we had AU down about 5% on the week. GG also down about 5% on the week. Those stocks have very similar patterns. We're expecting bottoms in the next 2 or 3 weeks. PAAS and AG, Pan American and First Majestic Silver, those patterns are in rising patterns, even with silver breaking. It's extraordinary they've held up, but they have got to turn around soon or they're going to be in some trouble. So we're watching those also for the potential of a upward turn. in those stocks. A couple, 3 weeks away, I think, in this whole sector of precious metals, and I think we're going to see them moving up again. Two stocks that I talked about for the negative side that I think are bearish setups that you're going to want to look at the chart, and you want to see the chart in my analysis. Take a look at our Thursday video stock sectors. That is CarMax and NVIDIA. I think those stocks are both stocks that are in a lot of trouble. That is our worst for the week. And in a moment, we're going to show you our short-term view for the stock market for the coming week. All right, before we get into the short-term view for the coming week, I want to show you something that I think is incredibly interesting and valuable. I'm going to take you to our rankings and trade setups page and do a quick explanation for you of that and show you what's going on for some stocks and for some of the commodities and how they've lined up really well with our momentum indicators. That's really what this is a momentum indicators. You could see there's long-term, intermediate term, and short-term rankings on there. These are our momentum rankings that you can see right over here. And this is our option bias ranking. So short-term traders or option traders are going to really look at these three right in here, the intermediate term, short term, and our option bias. Our option bias is a proprietary formula that gives us a good indication when there is momentum and that you want to have your bias set up in your option positions based on this. I think it gives you an excellent risk reward. On top of that, the overall picture of momentum has been really valuable. For example, Amazon, you can see, has been green right across, and the option bias is P2, so all strong. And of course the earnings in Amazon came out really strong, and that was perfectly in alignment. Take a look at Google right over here, or Alphabet, which had a strong P3 reading and P3 over here on the option bias, and of course that stock did really well on the upside. Also, Costco did a similar thing in here, as you can see right in here, that had good readings, and it moves strongly to the upside also. So this gives you a very, very good sense of upside. Deere did the same thing. You can see that. Now, Goldman Sachs is a stock that we thought was negative, and as a matter of fact, it's got a pretty negative intermediate term, short term, and option bias, and that one gave us a short setup the other day. You can see that right there as we've listed it. So this is really a good look at how this really works. When I go down over here, I'm going to go to page 2, and you can see I'm switching to the commodities right over here and the stock indexes. Of course, the stock indexes have been in rally mode, and you can see all of these in positive. These are our cycle readings right over there, positive 2s and 3s, and all of them in our option bias, all positive. You can see right over there as that's been really a good reading. Now, if you look at the precious metals that have been in declining mode, our option biases have all been negative for quite a while, so you'd have been directing your position on the negative side. Now, when you see these readings right over here, N1, that when it's N1 yellow, you could see that. That means that we're getting to the final stages. It's negative on the cycle analysis, but it's coming to the bottom of that, and that means that there's a turn coming pretty soon in there, and our analysis for our members is showing that we're expecting 2 or 3 weeks left on the downside in there. Silver is the weakest one, so you could see that is actually still an N1 red, but all of these things really giving you that indicator. And you could see in here as the euro pulled up pretty strongly, that's a P3 green, and even the yen that's pulling back is still in the positive category. Now, when it's 3, it's super positive. When it's 2, it's a little bit less, but good momentum. And when it gets to be orange, P1 orange, as you could see right over there, well, that says that it is at an extreme, and what we're going to do is give you that look at the potential for a weakness coming in and a reversal in when you see Walmart. P1 orange is a warning that it is going to reverse soon. So in that case, we have a short setup in there, but only a level 1. That would be a small setup there. As you can see, that just jumped in the Walmart position. So that is how we look at these. You could look at Starbucks right over here. And Starbucks also coming to a reversal time. It is extreme overbought in the option bias. So if you were long when it was moving up, because you can see all of our rankings are positive right there, then you would start to think, well, maybe it's time to get out of any long bias in there because it is extreme overbought. So I wanted you to get a picture of how that works. And now you can actually have that for a special. If you want to be a level 3 member, you get all of this analysis on this table, plus our trade setups, and all of our 9 categories of videos. You can actually have all that. First-time subscribers, all you have to do is send me an email, slim@askSlim.com, and I will send you a special link that will let you have that, all of that information, all of our videos, everything, for just $43, half price for the month. So it's a great way for you to really get a sense for the type of analysis we do without really needing to be a chart subscriber, level 4, because for our 82 best traded symbols, we put that right on here. So I think that will be very, very helpful to you, and I would love for you to send me that email and give this a try. So that's slim@askSlim.com, and here comes our short-term view of the stock market for the coming week. All right, so we're going to look at the S&P 500, always taking accountability of how I did in the last week. I didn't want to talk about it. Really got, I would say that the French election came out a lot different than I expected it to. I thought that we would see Le Pen make a much stronger showing, and if anything, have the candidate from the far left and the candidate from the far right be the ones that are facing off, and that would have been a scary situation because neither of them like the European Union. As it turns out, the middle-of-the-road guy, Macron, not only won, but massive lead in the polls, so the euro is probably saved, and that's what brought the big rally on Monday, and that brought the flight to safety bid to disappear, essentially, as they started to sell bonds and sell the gold market, and that really changed the scenario and brought the rally that we saw in the last week to a lot steeper level on Monday than I expected it to happen. So we'll take a look at what I thought was going to happen in the last week, and also look at what did happen and take a peek at what I think is going to happen in the coming week. Here is the chart of the S&P 500. So what I left in there was my analysis for last week. This is the cycle that we were looking at right in here. And my opinion was, as you could see over here, that it would get to these resistance levels, or just over the 2360 area, and then roll over, but not go that far, and then set up a better period over here. That's really as what I was looking for. Well, then you had this big upward gap on Monday and another upward gap on Tuesday, and that, of course, set up way different levels. Now, with the levels different, it doesn't change the cycle pattern that we expect in here. And you can see that gravestone doji that kind of set up the high right there, as we talked about in the beginning of the show, as we peaked on Wednesday after the announcement of the tax plan. And these last few days have just been moving sideways, and now Friday a little bit lower. So what we're expecting in the next coming week is really a small down week. You might try to get some rallies in here, but we're thinking it's going to get down into this support level right there. Test 2373 to 2363. That's that support zone. Then the following week, or this might be into Thursday, Friday, and then turning up like that towards the end of the week, this time period here is going to tell us a lot. That's this right over here, because I think that we're forming a major top and looking at the big correction I was talking about, and become a level 1 member, and you can see that video. And you can, this rally over here, if you understand, if you're really in tune at all with our style of analysis, we'll learn a lot if this is the pattern. As if this rally doesn't get very far and fails, and then whatever low this is on the correction gets taken out, that will set the top. That would be right there. I drew an M top if it formed that way. But this is the reason we expect some sluggishness in the coming week, and giving up, but not giving up a lot, and then turning up again. So we're just going to call the coming week a small down week based on the way this pattern sets up for the stock market. We're seeing a lot of weakness, down 1% in the Russell today, so that looks like, you know, some bigger corrective forces coming in the market. And we're going to say so it's been slow basically for the whole week based after that move on Monday. Of course, we have the FOMC announcement coming out on Wednesday. That could give us some pretty good moves, and then the employment numbers coming out on Friday. So overall, we're going to call a slow down week for the stock market. I hope you found a lot of that very interesting. Please do send me that email to slim@askSlim.com for our half-price special. And the level 3, want to be a free subscriber, become a level 1 member, take a look at our free videos that we're offering on there, and lots of stuff for you. All we want to do is make your trading more successful. I've been at this 43 years. It's my turn to share it all with you, and I hope you enjoy it. We are wishing this to be a great week coming up for you. Be careful, it is dangerous out there. And we're always wishing you great trading.
Well, I'm